minus 301,000. ADP saying that January private payrolls declined by 301,000. They revised down their December payrolls to 776 from the 807, which, by the way, remains a huge miss relative to what the BLS reported. But here are the numbers: minus 301,000 versus an estimate of 200,000 on the street. Just for the record, we did discuss on Monday the possibility of a negative print for the Friday BLS report. The goods sector falling 27,000, and the big hit in services down 274,000, as apparently Omicron had a massive effect. And there's the estimate for Friday, 150,000. You'll note that when we reported this initially, the estimate was 178,000. Dow Jones has now taken down that to 150,000. Here is the decline. Here are the declines by business size, and every single business size saw declines. Big on the small business, which is what you'd expect with an Omicron hit here, 144,000. Medium size businesses down 59,000, and large businesses down 98,000. Every sector except for, I believe, manufacturing. I'm not sure. We got to check that number there. Leisure hospitality down 154. Trade and transport down 62,000. Says they're manufacturing down 21,000. Education, health services down 15, and construction down 10,000. A quote here from Neela Richardson, from the chief economist at ADP, says the labor market recovery took a step back at the start of 2022 due to the effect of the Omicron variant and its significant, though likely temporary, impact to job growth. And Andrew, that's where we are. There was the report we did on Monday talked about the idea that people who are on unpaid sick leave, if they're not at work, right, they end up counting as a job loss. They come back, it's a job gain. And so we'll see if this is just a January thing. And the trouble is you cannot get a read, I think, from the economy from this number. Well, I will point out that I ran the numbers again this. Give me 1 second, Andrew. I'd say one other factoid here, which is that ADP year to date has had an absolute error of 292,000. That's positive or negative. So you've got to take this report and indeed all reports with a grain of salt. But I will tell you that both UKG and Homebase, who are the two high-frequency HR software companies whose data we use, have pointed to weak numbers.
Okay, so if this is obviously a weak number, I imagine you're extrapolating out Friday's a weak number. Just tell me what, to the extent that Jay Powell is looking at this and all of what we've been talking about the past couple of weeks has been hiking, does this change that equation in any way?
I don't think so. I think what we're doing here is thankfully we have this high frequency data. And I did check with the folks at UKG, my friend Dave Gilbertson over there. He tells me that in the weeks since the survey, there has been some strength of seen coming back already, especially in the hard hit service sector here. So that's one thing. I think Powell and company are going to look through this piece of data. I suspect that the market will as well. I would not take this as a sign that perhaps the Fed will back off its plans to hike. I think that is not going to be something the Fed is going to put into its calculus here. Yeah, maybe a little more weakness. If this continues, obviously, if we have weakness and we don't get a big bounce back in either February or March, it depends a little bit upon the timing of the bounce back. Right. If we don't get a bounce back, then I think we can start to think about fewer hikes, that kind of thing. But right now, I think this is a number that everybody's going to look through.